Thank you for joining us again. The Financial Reporting Council of Nigeria has stated that the country has not reached hyperinflation, thus negating the need for the application of International Accounting Standard 29 for the 2024 fiscal year. Rabiu Olowo, the FRC's Executive Secretary and CEO, stated that determining hyperinflation involves careful judgment and analysis of various economic indicators. And following a thorough evaluation, the FRC has concluded that Nigeria does not currently meet the criteria for hyperinflation, allowing for standard financial reporting practices to continue. Joining me to discuss this, I have right here with me, joining me virtually actually from Osun State, Olusesan Okunade, Chartered Accountant and Tax Consultant. Thank you so much, Olusesan, for joining me today.
Good morning, Perpetual, and good morning to our viewers across the globe. Glad to be here this morning.
We're glad to have you too. Now, talk to us. Is Nigeria a hyperinflation economy? Are we there yet?
I would say no. If you look at the definition of hyperinflation, it stipulates that you must consistently be having an increase in the price of goods and services to the tune of 50% on monthly basis. So when you look at that criteria, for one, you discover that for real, there is inflation. It has moved above the number, which we can all in tune say we have high inflation, but it has not met the criteria to actually say we are in hyper inflation for us to define that way. So currently we are not in hyperinflation, but indeed we are in high inflation, knowing fully well that once it goes beyond the normal threshold where you consistently have between 10% and 30%, you can consider there is high inflation, but currently we are not having hyperinflation.
All right, let's come to the 5 indicators as outlined in IAS 29. I would like us to begin with the first. The general population prefers to keep its wealth in non-monetary assets or in relatively stable foreign currency. Amounts of local currency are immediately invested to maintain purchasing power. Do we have data enough to substantiate that this is either the case or not the case in Nigeria?
It's not the case, I'll put it that way, underlining the word general population. If I may put it across to you, for me, I doubt if I meet that criteria, and I don't think that perpetually you are in that class. And if you want to put it, I don't think we are down the train that we can say that general population are investing in non-monetary. We're talking about assets, we're talking about having foreign investment play out. For real, it happens, but it's within few elites, possibly those that are in power and politicians, who their percentage, I can say it's not up to 10% of the general population. So going by the on the tune that IAS 29 speaks to, bringing one of the highlights of general population, that speaks to it that it is not in line with that. It is just for very few elites who have understanding of investing. And even before this inflation, a lot of them have actually been carrying out this foreign investment in assets, in foreign exchange, which a lot of us consider as a yardstick of the volatility we've been experiencing. Because a lot, rather than investing in production locally, have decided to choose the path of investing in a non-monetary thing, not even locally, but outside the shore of the country, to shove the value of their money in time to come. Because I can tell you, someone who has $1,000 2-3 years ago, if he has not done anything even with that same currency, I want to have access to it now, has actually grew in more than 300%. And I can tell you that it's only the elites who have more than enough excess in what they have, because as to speak, you and I can allude the fact that we have inflation, and it's difficult to save. So when average citizens are struggling to save, how do you want to have people investing in real estate and non-monetary value? It's not for the general population, but I can tell you the elites, which their percentage is very minimal.
I actually have an issue with this because it says general population. When you say general population, what comes to mind is that the population that hasn't conveniently eaten a meal in a day? Do we need to target everybody in this basket if we want to do something that one would call maybe fair enough? I mean, I would have thought this should target those from the middle class upward, just like you even tried to explain to me right now. What do you think about, that general population? Do you think it's good to have that clause or that caveat? I have an issue with that.
Yeah, the clause in that particular statement is really uncalled for. You can't overgeneralize issue to that extent to say general populace. Even the middle class, as we speak, I will tell you that it has collapsed. We have the elites and the poor in the current situation. It's either you are there or you are not there. And as we speak, a lot of people, even when you look from the figure that we've had from NBS, the multidimensional poverty level has suddenly increased because of the certain factors that the government alluded to: the removal of subsidy, the inconsistency, volatility in foreign exchange, the continuous increase in the price of goods and services, the non-availability of food based on insecurity has actually created a collapse of what we will call the middle class, which always start as the intermediary between the elite and the poor. So rather than having middle class, I think we now have the elite, the poor, and what you and I know, the poor of the poorest of the poor, which are the downtrodden that the government will always make reference to, that they need to take out of poverty to make poor, so that we can restate the middle class. So for me, the choice of words of general population is really misleading and does not substantiate the fact which buttress this hyperinflation we are actually speaking to.
All right, so I'll take the second, beg your pardon, I'll take the second and the third criteria, and I'll get to see what you think about that. The second one, I can sort of excuse it. It says the general public or the general population regards monetary amounts not in the local currency, but in relatively stable foreign currency. I'm not sure we are there yet. I mean, to a very large extent, things are still quoted in Naira, and we're not, deferring is so much to dollars or any other foreign stable currency. Now, the third one says sales and purchases on credit take place at prices that compensate for the expected loss of purchasing power during the credit period, even if the period is short. Now, this particular one is a bit dicey because I know people who sell higher by default to people who are buying on credit. I mean, by default for them, if you're buying on credit, you're not paying right now, then there is a percentage we need to add to it. But I think, that sort of takes place, or it takes a level of financial literacy for any seller to sort of make that decision. What do you think, looking at these two factors?
Yeah, when you look at this factor, like you alluded to, the first one, that speak to people investing in a foreign exchange, I don't think we are there. Neither are we actually pricing some, although I know is obtainable in the country, but I know the federal government is seriously working to checkmate the activity of people that might intend to carry out their transaction in foreign exchange. I know there is actually a regulation that addresses that issue, because there are some landlords who comes up to tell you that I need my money paid in foreign currency. I don't want it in Naira denomination. And federal government,
Mr.
state government are actually, yeah.
But before you continue, I want to ask, how widespread is that? Because for me, if you say general population, I have a problem with the general population we're saying in most of these things. So I'll probably just excuse the general population. But apart from the general population, how widespread is that? Is it enough is it concerning the way it is right now?
Well, I would tell you that it's not concerning. Not a lot of people are actually carrying out that particular act of using foreign exchange to carry out their transaction within. You can do your business and convert your money at your convenience to foreign exchange if you intend to. And I will always speak to people to say, for real, things are really not the way it should be. There is hardship in the land, but the way and manner we over-bloated the recognition, and that's what have actually led to this issue of hyperinflation. For real, we know that we are having high inflation, but but it has not gotten to that hyper level that we consistently say. A lot of people are actually taking their funds, investing in, but they are very few percentage. I can say that we don't even have up to 10% of the population that does that. We can take a random sampling in my office, in your office, even a lot of people that feel it is when you have savings, you can start considering some of those things to say you want to invest in foreign exchange. So the percentage of the people that are actually carrying out that particular, even with the so-called foreign exchange trading that people are actually venturing into, when you still go around, the level of poverty has not actually given that stance for a lot of people to venture into that particular thing. So all I can say is that we will continue to monitor the activities. Of a truth, we have gone beyond the normal threshold of inflation, currently experiencing high inflation, but we have not gotten to the level of hyperinflation because that speaks to the fact that we must have consistently 50% increase in price of commodity on monthly basis. That's when you have met that criteria of saying that we are under the aspect of hyperinflation. And to the fact that a lot of people, general populace, or a lot of people are investing in foreign exchange, it's happening, but the population cannot be compared to a lot of people that are still struggling to make ends meet as regard the survival. It's when you survive as a country, you consider the fact of investment in the other plight. As we speak, it's a survival of the fittest to even see that you can consider anything or get anything to eat, pay and meet the basic need of housing. As we speak, people are struggling to pay their rent. As we speak, people are struggling to even fulfill their application in terms of cost of logistics.
Mr. Okunade, you know, from what you're saying, I'm asking myself, maybe it's the definition or it's the factors that are the problem. Because if you say that people do not even have enough to eat, let alone save, shouldn't that be an indicator? What other indicator do we need? I mean, the last indicator talks about how that if over a period of 3 years, inflation is approaching 100%, then there is hyperinflation. I mean, looking at that, that looks like something that is easier, you know, something that you can look at it and say, okay, yeah, sounds good. And of course, Nigeria has gone above 100%. But in a situation where we have people that cannot feed because of cost of living, what more do we need to see before we say it's hyperinflation? I mean, I want us to look at it critically. If the FRC or if the IAS 29 has not prescribed these 5 things that we are looking at, just looking at what's happening, what's obtainable on the ground, can we say that this inflation is beyond normal?
I allude to the fact that the current inflation is beyond normal, and that's why I will refer that we have high inflation, but still maintain my position that it has not gone hyper. Whether we like it or not, there is still a few survival means for us Nigerians. I salute the resilience of an average Nigerian, and that's why we keep addressing some of the issues that we feel that government needs to address urgently to ease the burden. And number one of it is the level of insecurity, to make sure that we have available food for everybody to consume. You see, if you are able to take food out of the basic problem that you are faced with, you discover that it has gone a long way. We have gone to say, government, can you go the route of seeing how you can actually relieve the burden of logistics, because everybody needs to go here and there to reduce the cost of buying things. Logistics contribute a very key area. We are addressing the issue with the government to say energy is very strategic for the survival of every business, but it is high up there that it's becoming unbearable for businesses to survive. What are areas that the government are looking into to bring some of these things down? These issues are being addressed, I would say. And I'm alluding to the fact that we have high inflation because of certain policies that the government have actually put in place that they say is addressing some fundamentals. But I think some of those things, as promised by the government, should start unfolding, and we'll start monitoring the dividend that it will give. Why I still maintain the fact that despite that we have actually weighed the issue of 100% for 3 years, as a nation, it has not gotten to the level of having hyperinflation, knowing fully well that the yardstick is 50% increase consistently on a monthly basis for you to be able to say that currently you are.
All right, Mr. Okunade, just before I let you go, number one, I want to ask you, I mean, if your company has adopted this IAS 29, if you can hear me, I'd like you to answer that. And apart from that, Taiwo Oyedele, during a conversation recently, said that the MPC, Monetary Policy Committee, that's it, that the MPC was talking inflation with its MPR hikes. What do you have to say about that?
Okay, well, to the first question, since I don't believe we are in hyperinflation, we are not adopting IAS 29 because you must definitely have a regulation which FRS will definitely substantiate to say at this point, let's accommodate this so that we can have a true and fair view of reporting the state of things. So it's still the normal thing everybody is operating with. To the statement of Taiwo Oyedele, I think the monetary policy needs to look more into now to certain things that they are doing. We have relatively stability in foreign exchange, but we are still of the opinion that we need a situation where we can crash some of these things down. And the only way this can be done is how the different agencies of government can collaborate in bringing down the cost of production. As we speak, production in the country is relatively tight, and when you don't produce anything, there is no how you can contribute to the bottom line, and that is why we have the major problem. The cost of borrowing is high, inflation is high, so the cost of energy is high. So how do you expect an average organization to survive? And that's why you see a lot of companies moving out of the country to a neighboring nation where they feel that they have other cost of operation reasonable to do that. And the next thing they do is to now move those things into the country, which is not assisting our economy. I think government needs to be intentional, if you ask me, that we concentrate more in area to liberate our production arm of the economy, the manufacturing sector, to give room for increase in employment, have more productivity, and be able to reduce. When you have more supply, the law of economics will definitely be fulfilled. But as we speak, you discover that demand outweighs supply in every area, and the only area to augment what we have is by importing, and that's why we keep continuously having pressure on our foreign exchange. So government needs to be intentional in some of the things that they need to do. The fiscal policy arm are actually doing their plight with some of the suggestions that they have done. If you have gone through the tax reform that is awaiting before the National Assembly, is to create relief to businesses, which a lot of things have actually been shown up. Also, even to individuals, we now have so much relief that can augment some of the things that we are facing. But the monetary policy needs to have good handshake with the fiscal policy so that we can arrive at a destination that will move our country forward. Truth be told, the economy is not smiling, but we are not in hyperinflation season.
Right, thank you so much. Olusesan Okunade, Chartered Accountant and Tax Consultant, for joining us today and for sharing your thoughts with us. Thank you.
It's a pleasure to be with you, Perpetua. Have a wonderful day.